What a crazy day today. Oh man. I was betting all weekend that oil was gonna go back up, go past 136 and just keep going 140 today. I really thought that, but then because of some weak economic data from Europe and definitely oil pulling back, the dollar rising, stocks took a turn um, higher, and oil stocks and oil in general went down lower. So you know what? It's just that you just gotta never know what's going on with the market. And today I made a bet on the wrong side of it. But I'm not really not scared at all. I still see a lot of volatility in the market. I still see that oil is gonna go higher. Just like what Goldman Sachs predicted at 141, I see it going 150. Um, it's just that we're coming back. We're coming into the summer. We're coming into the elections coming up. A lot of volatility in the market right now. Instability or instability in the U.S. economy. So I really don't uh, see this as a long-term rally. I see going down the next day. So I'm not really concerned. For those who are concerned and are thinking of pulling back their stocks in oil, I suggest you keep it long, maybe towards the end of the week. By then, we should know, since it's a short week, we should know by at least Wednesday afternoon or even Thursday morning where this market's starting to head. If it's going to go higher or if it's going to go lower. I'm kind of bearish right now. And so I don't see uh, any any strength or rally right now in the market. So what 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 I want to talk to you guys today a little bit about was what does it mean to buy a stock, and what does it mean to sell a stock, and what's the difference between a market and a limit order. Again, these videos that I'm making are for the person out there who's just like me, who's thinking about getting into trading stocks but don't know much, and just needed someone to tell them really from the point blank, you know, how you say, I don't know the word, just the basic terminology, basic understanding of how to buy stocks. I mean, it takes like a minute to learn how to buy a stock, but it takes a lifetime to master trading and investing well with your money. So here we go. Well, buying a stock. So a stock is necessarily um, a piece of paper, I guess you could say, or some type of security, some kind of contract that says that you own a piece of XYZ company. And it's, for instance, let's just say something easy. How about Google? Google stock right now, it's worth uh, about 356 a share, $356 a share. So for instance, if you had $356 to buy a stock and you want to buy in Google, you would be able to buy one share of Google, and you would own one share of how many shares Google is. So for instance, if the market were to take Google stock and go to 500, uh, is it true that, am I saying the right things? No, Google's not at 350. Google's at 530 or something like that. I don't know. The numbers are doesn't really matter. But let's just say Google stock is 350 and the market takes Google stock to 500. Meaning, if you bought it at 350 and Google stock went to 500, you would gain a difference of 500 minus 350, which is $150. You would gain on that one share of Google. Now, if you had 10 shares of Google at 350, that's what, 3,500. And if it went to 500, you would get 5,000. You would essentially have something that you bought at 3,500 now worth 5,000, and that difference between 5,000 and 3,500 is your profit. And if you were to sell it at 500, you would have essentially made $1,500 on Google stock. So that's basically what it is to buy a share of a stock and then selling it high. So what does it mean when you buy and sell shares of stock? So it's all based on something that's just basic economics. It's supply and demand. So if there's a high demand in the stock or in some type of commodity or what have you, um, that you would want to pay more if you're wanting to, if people in general and public in general want to pay more for an item, that item is going to be worth more than something that's plentiful. For instance, if you had an orange that you want to eat and you had the only orange in the world, you, that orange is going to be worth, millions of dollars because a lot of people like oranges, I think. Anyway, that's what I mean by why a stock goes up and versus why stocks don't. So that's buying and basically buying and selling shares of stock. Essentially, that's what's happening. So, how can you buy a share in a company or a stock? So there's two ways you can basically do it. You can place something called a market order, meaning the price of that stock at that time when you buy it is the price that is set for you. Meaning, say you wanted to buy stock real time of, again, let's say Google, and you see the share price on the